Hi, this is Kris from Movement Mortgage.
And I'm Sam St. Louis with Allied Realty Group. Today, we have something exciting coming for you. We want to talk about a certain type of transaction that I feel like we're seeing a lot of, and especially in our area. So when we have, I have a seller and they want to upgrade, they want to move up essentially, but we need to sell the house. So how, from a lender standpoint, like how do we approach that first?
One of my favorite things to talk about, we always say, what comes first, the chicken or the egg? Meaning, okay, I want to sell my house. What do? Do I need to go out and find a new house first, get an offer accepted? Sure. But then is that seller going to allow a sale of home contingency, right?
Yep.
If not, or do I need to sell the house first, but then where am I going to live? Because if I have an offer pending, the question is, oh, wait a minute, where am I going to live if that new buyer wants to get in before I find a house that I like? So with that, we have a couple different options how we can handle it. First, what we like to do is a big review as far as what can we do. Can we take a look at bridge financing? Can we take a look at maybe doing a home equity loan to pull some funds out for the down payment on the new one?
Sure. Okay.
So, each one's a little bit different, but it's more popular just because of the season that we are in right now.
Right.
You, as a real estate agent, you take a look at if you're the agent of the seller and if you have multiple offers coming in, chances of you accepting a sale of home contingency are pretty,
I'd say, slim.
Since we have to take a look at all the different options and get crafty, or in essence, take a look at every advantage that the buyer has. So when it comes to that, there are options out there.
Yeah, because they come to us and we give them, their market analysis. And because a lot of them have such a large amount of equity in their homes, they're able, they see that and it's like, okay, well, what can I afford? Because, that essentially goes towards their down payment, that whole.
Correct.
Yeah.
And this is where your favorite word comes in, strategy.
Yeah.
So we have to strategize as far as taking a look at, if they see a house that they absolutely love, what is the best possible way of doing it? Right. Can we take a look at the bridge financing? And if you think of it, the bridge financing will allow you to make an offer, not subject to the sale of your home, but in essence to be able to buy that new house once you get an accepted offer on yours. Well, let me redo that again because that's mixed up there. So essentially the bridge financing would allow you to do is the bridge financing will allow you to make an offer on a house, not subject to the sale of your house. And if you can't sell your house in time when your accepted offer was, this will allow you to close on it successfully. Now at the time you may have, two heating bills, to electric bills, so on and so forth. Yeah. But again, we have to be strategic in how we want to do that. Sure. So in essence, if you see a house you like, can you get an accepted offer on that without the sale of your home? But then in the meantime, can you hurry up and get your house sold?
Right. Yeah. I mean, and a lot of the times when we're having that conversation with our seller clients, we will price it aggressively. We will do what we need to do to get our home sold, to get to this. And even though, I think if we're in a multiple offer situation, and this is actually a good tip that I just kind of learned along the way, when we have multiple offers that come in, instead of, okay, well, this one's the highest one, this one doesn't have a home sale contingency, obviously a home sale contingency is probably going to lose, but really pay attention to the strategy behind the offers. Just because this one's the highest doesn't mean that it's necessarily the best. I mean, it's subject to an inspection. Maybe this one has no inspection. They really pay attention and do what we need to do for our clients to make sure and ensure the sale of their home.
And I think too, if you're looking at, doing a type of bridge financing or home equity loan in order to not have your home subject to a sale of home, there are different options that you can kind of take a look at. Let's talk about bridge financing. Essentially what you're doing is you're taking equity in the current house that you own.
Okay.
And I'm going to pull that out for the down payment on my brand new house.
Okay.
So then that's going to effectively allow you to close on your brand new house without the sale of your house.
We pulled that equity from there. But now when we go to sell this house, we have to keep in mind that we need to make enough, right? Am I thinking of that correctly?
Correct.
Okay.
Yep. So when you sell your current house that you live in, that's for sale, that loan, that bridge loan, that will get paid off.
Okay.
And here's the thing: we will make sure that there's enough equity into that property that makes that it makes sense for that. The nice thing is that in essence, once everything is closed, and if you do end up having more money to work with from the sale of your house, you can do what is called a recast. So for example, if you only want to put 5% down on your brand new house, and then once everything is closed, you have an extra, $50, $60 more or $1,000 to work with, you can actually do what is called a recast. And a recast, what allow you to do is take what your loan balance is, drop it down, put that extra money down, and it reruns itself over that new amortization, effectively lowering your payment. So that's a recast option. The other option is taking that lump sum and then just putting it down on the current mortgage itself. Your payment won't change. The recast equals reducing your payment.
That's good to know.
So if that makes sense.
Yeah. And correct me if I'm wrong, but bridge financing, normally we try to last case scenario that, correct? We don't. Okay.
Correct. Because in essence, you're going to have cost setting your bridge up. When we close on your bridge loan, we want to do it at the last, I don't say last minute, but in essence, right before you're closing on your new home, because what is it's interest is accumulated on a daily basis. So as you can see, that interest is going to add up. So it is an effective tool to use. Does everybody qualify for it? No. Does everybody feel comfortable with it? No. But in essence, I think it shouldn't be so scary, because you know what? It's a great tool to use to get into the house that you want and effectively be able to sell your house.
As a very good information, because that's scary we have no business explaining that to our clients, but it is confusing when they question, okay, well, what do we do? And it's funny, I actually got asked this the one day, and I guess shame on me for not explaining it when we sat down, but my client said to me, is it expected that we should probably get a storage unit, or how does this actually work? Are we doing back to back? And I said, well, yes, essentially we're going to sell your house first, and then that money is going to go towards your next house. And I'm like, so he goes, so we're actually going to be homeless for a couple hours? And I said, well, if you want to look at it that way, but so that's where it gets kind of scary when you have to explain that to them, and they think, oh my gosh, anything. If I have learned one thing in real estate thus far, no matter what the transaction terms are, anything, nothing is guaranteed until you walk out of that title company with the signed papers. Nothing is guaranteed.
It's important when you're taking a look at, making that move up or even move down too, that in essence that you're working with a really good team that knows your numbers, know what your limits are, and know as far as what the timeline is. So in essence, certain bridge loans, typically are going to be out anywhere from 6 months to a year. But just think of that. You're going to have your new house payment in additional to possibly, the bridge payment, in additional to, you may even have your current mortgage payment as well too. So each one's a little bit different depending upon the situation, depending upon your equity situation. But over time, you have interest that's going to compound after a while. And, just think if you have that for a year, can you essentially afford it? Because you really want to make sure that you're working with a really good agent that's going to price it accordingly and make it sell. Don't be afraid of bridge financing. I think it's a great vehicle for one to use to get to the next house where they want to be, whether you're moving up or moving down. It's a great option, and happy to explain that to anybody. And again, Sam's happy to walk you through as far as how to effectively price the home and to get it sold.
And then I'll pass them along to you for the bridge, because I have no business explaining that.
Right on. Happy to. Happy to.
All right. And then I'm Sam St. Louis with Allied Realty Group.
And I'm Kris Weniger from Movement Mortgage. Thanks so much.